If you've been watching the chart since Sunday, congratulations. Bitcoin is up 5%, hitting that mid 90K level. But before you celebrate, you need to check your watch. We aren't waiting for news tomorrow. The most volatile event of the entire month is happening today. While everyone is distracted by the 5% pump over the past couple days, the macro calendar is loaded with a double-barrel shotgun tonight. We got the PPI data and a Supreme Court ruling on tariffs. Now let's break down the risk. Here's the timeline you need to write down. Now the PPI, also stands for Producer Price Index, is the inflation gauge. If this comes in hot, it compounds the fear around Powell investigation. But honestly, that's just the appetizer. We're expecting the Supreme Court ruling on the new tariffs. Market are currently pricing in a 70% chance these tariffs get ruled illegal. If that happens, market could rip higher. But if the court surprises us, this 5% pump could retrace instantly. Now let's look at why we're up here in the first place. First, let's look at the short squeeze. In the last 24 hours, over $591 million in short were liquidated. Basically, bears betting on a drop got forced to buy back. This is the chart that matters most. Yesterday, the Bitcoin spot ETF saw a massive $753.8 million net inflow. This tells us that institutions stepped in aggressively yesterday to buy the dip. So we have spot buying and short squeezing. What's the risk? Now let's take a look at the open interest. The OI is up almost 5% in the past 24 hours. When price goes up and OI goes up, it means traders are confident in opening new leverage longs to chase the pump. However, the funding rates are actually keeping me calm. They're sitting around 0.003 to 0.01%. Now this is critical. Usually at a euphoric top, these rates spikes to 0.05 or higher. But right now, they're neutral. Now this indicates that the rally is pretty healthy and it's driven by spot buying, not just over-leveraged gamblers. If the Supreme Court news is bad and we flush, that's your first line of defense. But if we survive the volatility, then we look to the Fed balance sheet tomorrow morning for a liquidity check. Coming next, imagine locking the doors to one of the most aggressive crypto market on earth for 9 years, and then, overnight, throwing them wide open. That just happened in South Korea, but the market hasn't reacted how you'd expect it yet. Now before we get to Korea, let's address the elephant in the room. A lot of you guys were expecting a massive regulatory pump tomorrow from the Clarity Act. Now, this is cancelled, and this has been officially postponed to late January. Now the reason behind this is because the Senate banking committees tried to sneak in a ban on stablecoin yields, basically making it illegal for platform to pass interest income back to the users. The bank pushed for this because they're terrified of deposit flight. Now Coinbase effectively draw a line in the sand, and now the bill is stuck in a deadlock. Now here's the heavy hitter for today. Since roughly 2017, South Korea has had this strange disconnect. You probably have heard about the kimchi premium. That's pretty much when Korean retail traders buy so much crypto that the price in Korea is actually higher than the rest of the world. Their retail market is huge, but for the last 9 years, there was a hard stop. Corporations were effectively banned from opening crypto accounts. Now think about what that means. Individual could gamble, but massive tech company in Seoul couldn't legally put Bitcoin on its balance sheet or build a crypto product with its own treasury. That specific wall just came down. The Financial Service Commission is moving to allow corporate account. Now why does this matter to you? You might be thinking, well, if there's more buyer, price is going to go up. But here's the mechanism you need to understand. Retail capital, meaning the money you and I trade, enters and exits in minutes. But corporate capital is pretty sticky. When a corporate allocates to crypto, they have to go through board approvals, risk committees, and audits. They don't panic buy or sell because Bitcoin moved 5% in an hour. So the question you should be asking yourself right now is that, if this is such a massive news, why didn't we see a gigantic green candle instantly? The answer is execution lag. Just like we saw in the US ETF. The announcement is instant, but the flows take months. On the other side of the world, Australia is doing something similar, entering their execution phase for regulations. So we're seeing a reinforcement on a global trend, not just one country. While the humans in Korea are getting their paperwork ready, there is a totally different race happening on-chain involving users that aren't human at all. We're seeing a very aggressive narrative pivot from Solana towards AI agent. Let's pause and explain this, because AI crypto is usually just a buzzword used to pump token. Now what does an AI agent actually need from a blockchain? Imagine you have an AI bot designed to trade arbitrage or pay for data stream autonomously. It might need to make 5,000 transactions an hour. Now if that bot is on Ethereum mainnet paying $5 per transaction, it's going to go bankrupt in 10 minutes. Now the argument gaining traction right now is that Solana is the only chain fast enough and cheap enough for these robots to live on. This isn't about people buying JPEGs anymore. It's about infrastructure for software that pays other software. If AI is the future of Solana, does that mean the real user experience is going to suffer? We've seen congestion on Solana before, so if you add 1 million bots spamming the network, does the chain break? Now that is the risk side of this narrative that nobody is talking about yet. Anyway, it feels like a weird week, doesn't it? We have these massive legal doors opening in Asia, and we have robots trying to take over the blockchain. But the market isn't doing what we've expected it to do. But hear me out. This could potentially be when the real floor is being built. When boring stuff like corporate laws and infrastructure get fixed, that's what's going to support the market down the road. Alright, that's what I have for you guys today. If you feel like I missed anything, feel free to drop a comment. And if you found this video helpful, make sure to drop a like and subscribe. I'll see you in the next one.